Sasol was founded in 1950 to make oil from coal for the South African market, as the country had no significant crude reserves. Today, Sasol uses coal, oil and gas reserves to manufacture and sell liquid fuels, fuel components and chemicals throughout the world. Sasol has a market cap of 236 billion rand, a PE of 9 and a dividend yield of 4.7%. It's also the stock that every single fund manager across South Africa loves to have in their portfolio. Are you one of those, Jean-Pierre?
I am at current prices, yes. I think if one builds a portfolio, it's important to always have exposure to different sources of risk. Obviously, with oil being a non-renewable commodity and the risk of supply of oil in the world economy, Sasol is a cornerstone of most portfolios.
Well, let's look at the share price, Craig. Before we come to you, Sasol at the moment is trading where? Just below 400 rand. And Jean-Pierre says he's buying currently. Craig, what are you doing with Sasol at current levels?
Of course, this show we're talking about a longer term view, 3 years or longer. And so I think that's very important if you're going to put it in a long-term portfolio. And it's a very diversified group. So you've got your chemicals, your surfactants, your polymers, and all that sort of thing. But the main component that we always talk about is the synthetic fuels business, where they're able to change coal to liquids and gas to liquids. And that's interestingly only 20% of revenue, but 60% of profit. So you've got all that leverage there. And so my thinking in terms of 3 years is what effect will firstly your shale gas and your shale have on those Synfuel profits going forward, because that's really the important part of the business. And then the rand. If we're looking for a weaker rand, then yes, very good for Sasol. Oil prices have been at fairly high levels, come off a little bit recently, but where they're going to be 3 years down. And so from that point of view, I'm actually been trading Sasol rather than in my long-term portfolio, and because I don't think the foresight 2014, 2015 we're going to see the type of growth that we have seen in prior years.
Why would you want to be at the mercy of two external factors that you have no control over, Jean-Pierre, that of course being the rand and the oil price?
Well, in the case of Sasol, they have this homegrown proprietary technology where they can take coal and gas and change it into oil, into the liquid. And I think even though they are exposed to the vagaries of those commodities, that technology positions them very well. So with natural gas prices being very low because of all the fracking in the US, it means there's a large arbitrage spread between gas prices and oil prices. So rather than playing the absolute level of those commodities, they're playing the gap between those. And at the moment, that's why they're pushing a lot of capital into the development of further operations in North America to really try and benefit from the difference between gas prices and oil prices.
And that of course gives you the blue sky that fund managers are looking for. Craig, what is going to be the re-rating on Sasol? A number of fund managers out there of the opinion that that re-rating will come when the international community cottons onto the value that Sasol is offering, and that will push forward the momentum.
Well, I remember sitting on an airplane chatting to someone about a decade ago and saying that Sasol should be around 400 rand a share. And, we're sitting at those levels right now. So it's a good question. Certainly a weaker rand will help re-rate it. But I think to a large degree, the international community is aware of Sasol. If you're investing in that space and you're looking for oil, it's pretty well known. A lot of fund managers, both internationally and locally, do hold the share, but and that proprietary technology is something that it's had a competitive advantage for a long time on. I think in the short term, part of the reason that it perhaps hasn't run is people are asking where's the world heading, and when the global growth is pretty confined, one doesn't expect oil prices to be high, and I think from that point of view, perhaps there isn't that kind of global attention on that sector right now.
In terms of Sasol, where do you think we're going to go on the stock? As Craig says, he said to somebody 400 rand probably fair value. Am I misquoting you, Craig? Fair value at 400 rand for Sasol?
That was a discussion about a decade ago. What I'm saying is the share price actually hasn't moved from those values, and probably 400 rand is fair value. But I think you're going to see valuations not much. What is the value in 3 years' time? I don't think you're going to see it much higher.
Well, you're hoping that you're going to see it much higher than the 400 rand level. Where is that kicker going to come from, other than the gas exploration or the gas development in North America?
It'll probably come also from oil prices still being at relatively high levels. Every now and then you get an opportunity when markets misprice securities, and we think that Sasol at the current price is one of these cases. Where if you look at the peer group, the Shells, the Totals, etc., from an international investor's perspective, they compare all of these and then Sasol looks in line. But because of its proprietary technology and that it doesn't explore for oil reserves, it rather goes for the gas and coal feedstock, and then through their technology convert that into oil, we think that means that they should have a higher rating, and we think there's a lot more value than the current share price implies.
Hot or not on Sasol, Jean-Pierre?
Red hot, we like the stock a lot. It's one of our major holdings.
Craig, hot or not on Sasol?
I'm going to say not hot for the reasons that I alluded to, but certainly one that I trade if it goes lower.